Me as a customer having a bank account, I want to invest my money. And if you don't give me the options to diversify my portfolio, what will I do? I will move to the crypto companies and start investing there or move to the brokers.
10 years ago, cryptocurrency was in its infancy, and the idea of a bank engaging with its infrastructure was frankly ludicrous. Fast forward to today, we're in the midst of a virtual asset revolution. Consumers are diversifying their portfolios to include crypto, with investment doubling in the last 3 years. However, integration with financial institutions has been a challenge, and regulators are struggling to keep up. Today, I sat down with Sheetal Bhardwaj to dive into digital asset compliance. Sheetal is the head of virtual asset compliance at the Commercial Bank of Dubai. During her 20 years in the compliance sector, she's managed successful programs that have ridden the wave of technological progress. In this episode, we look at how compliance has shifted in the digital realm, why regulating across jurisdictions is a challenge, and how AI monitoring can increase the appetite for risk. This is BCG on Compliance, a podcast that explores today's most pressing criminal trends and how compliance professionals are adapting to stay ahead of that curve. I'm Hanya Seibert. Over the past couple of years, Sheetal has worked with organizations at the edge of innovation, from renowned cryptocurrency exchanges to a trailblazing Big Four financial institution. Right from the start, Sheetal's career in compliance was intentional, driven by her curiosity and a personal call to action.
So my fascination with financial crime prevention began during my early days at the university, when I was doing my MBA and I was learning about the stages of the money laundering and fraud. The complexity and the impact of financial crime on economies and individuals sparked a deep interest in me. This led me to pursue a career. I didn't know that you can even have a career into all that, but yeah, eventually everything fell in place. So there was a tragic event happened, which we know September 11, 2001, which further solidified my interest. The attacks revealed sophisticated financial networks that supported terrorism, highlighting the critical role of money laundering and terrorism financing there. So the investigation following 9/11 demonstrated how terrorist groups utilized complex financial systems to fund their activities involving shell companies, Middle Eastern chains, anonymous accounts, jurisdiction, and the lax regulations. So the journey in this field is driven by a commitment to protect the integrity of the global financial system and contribute the security and the justice to our society.
How has compliance changed ever since you started as a compliance officer back in 2006? I mean, this is almost 20 years in the industry. How has it changed?
So change is the only thing which is constant, as we say. So you were driving the petrol or a diesel cars in the past. Now Tesla is taking over, or there are a lot of other brands which is coming up with the electric vehicle. So change is the only thing which is constant. So working at the major institution has provided me with a diverse perspective on compliance. Each institution, whether it was a big or a small, has its own unique challenges and strengths. It has helped me to develop a comprehensive approach to compliance. During my career, I had privilege of navigating diverse regulatory landscapes. So I've worked in 3 countries, which is India, Middle East, Dubai is my home for the last 20 years, and I've also worked in New Zealand. So each region presented its own set of regulation and compliance cultures, enriching my understanding of the global financial system. So the compliance space changed since I first started as a risk and compliance officer back in 2006. It's come a long way. Back in those early days, it was mainly about ticking boxes and ensuring we adhere to regulations. But over the number of years, it's becoming more and more proactive and strategic. So there is now a strong emphasis on the risk management and using technology to keep ahead of the curve.
And what has drawn your interest in the virtual asset space?
So, what has drawn my interest into virtual asset space? So, I think it's a blend of curiosity and accidents. So, when I say this, the virtual asset space represents the frontier of the financial innovation. I was always been a part of the new payment technologies, emerging technologies. That has been my strong forte. The potential of transforming traditional finance coupled with the unique compliance challenge it presents drew me to this field. As a child, I was always very inquisitive. I was always curious. I always wanted to try and experiment new things. So the opportunity to develop and implement robust compliance framework that keep pace with the rapid technological advancement is both challenging and it's a privilege. So my journey from traditional finance to Web3 compliance was somewhat organic and accidental.
And so, if you compare the virtual asset space with the fiat money or traditional finance, what, in your view, are the biggest differences or the biggest challenges in combating money laundering in the virtual asset space?
See, money laundering is money laundering, right? The source or the origin of the money is always illicit. So, first of all, let's discuss the major challenges we face in the virtual asset space compared to the traditional finance. From the end user perspective, the anonymity and the speed of virtual asset transactions can make it tricky to ensure they are not knowingly involved in money laundering activities. Educating users about these risks and implementing user friendly compliance measure is very, very, very crucial. From the regulator perspective, they are still struggling to keep up the rapid evolution of the virtual assets. There's a lack of standardized regulations across different jurisdictions, and tracking transaction on a decentralized platform adds to the complexity. Now let's compare digital assets compliance with traditional finance companies. In traditional finance or a TradFi, compliance relies on a well-established protocols and strict regulation that have been developed over the number of years. However, digital assets require more agile and forward-thinking approaches due to the dynamic and decentralized nature. Traditional compliance measures, as we all know, CDD, KYC, AML, need to be adapted to the virtual asset space. Here, the new technologies such as blockchain analytics and decentralized identity verification comes into play. So this is something which is still very naive, it's still evolving. So that is one of the significant challenge the digital assets compliance, what we see. And I think that's also kind of diversified from the traditional financial institutions.
Great. And if we're looking at individual virtual assets like Bitcoins, NFTs, gaming tokens, governing tokens, what would you say is the furthest along in being integrated into the quote unquote mainstream banking system?
When we examine individual virtual assets, it's clear that Bitcoin stands out the most widely recognized and integrated within the mainstream banking system. Its acceptance is relatively higher compared to the other virtual assets. I'm not saying others are not there, but still, Bitcoin is the longest, and there is a well established infrastructure supporting its use. So you have many users. This makes Bitcoin a pioneer in bridging the gap between traditional finance and the world of virtual assets. You would be even hearing that US is coming up with the Bitcoin reserves and all. So hands down, it's Bitcoin.
Bitcoin may be a pioneer, but many banks have a low appetite for crypto and face challenges in evaluating the respective risk. As a result, many traditional banks decide not to onboard crypto players or provide wallets to their customers. Even with strong incentives to adapt, financial institutions are struggling to integrate and monitor key areas, such as the exchange of crypto to fiat. I asked Sheetal how they should approach the new demands of today's markets.
So the banks should come up with a risk-based approach. What we do is, and that's a precise reason that why I'm talking to you, I have worked on all the side of the businesses. I've worked with the biggest crypto exchange. I've worked with a big four, which is doing some trailblazing work into the digital asset space. And I'm working for one of the banks wherein I'm now supporting and kind of, bridging that gap in the ecosystem wherein we can offer the banking solutions to the crypto companies' customers, which support them in converting their fiat to crypto and crypto to fiat. Now the question is that how do I monitor and how do I do the on-chain monitoring? And do a bank require to do an on-chain monitoring? So I'll again go back to the question of your risk-based approach. When you onboard a crypto company, you please ensure these are not the un-KYC'd or non-KYC exchanges. These are not an unregulated exchanges. So if you deal with a regulated exchange, there is a regulator who will issue a regulatory license to these exchanges. What does that mean? That means these expectation from their regulator is they should have the AML, the CFT, the sanctions program in place, the ABC program in place. They should have not the manual monitoring, rather an automated monitoring in place. They have a state of art on-chain monitoring systems. So when you onboard somebody, it's a simple your correspondent banking relationship. I don't know who your customer is, but do I need to know who my customer is? I don't have to. That's not my ownership. So if I'm dealing with a regulated exchange, the regulated exchange has got their regulatory license based on certain checks and balances by their regulator. So when I onboard them, I'm putting my dependency on that exchange that they are onboarding the customers who they know. There is nothing which is not known to them. I will drive my comfort after assessing their systems and control, whether they are at par with my systems and control. I will kind of indemnify myself with my contracts, my legal bindings, and I will also put some spot checks and all those things. So as I said, you need to define your risk appetite statement, go with a regulated exchange, see what kind of a blockchain analytics tool they're using. If there is a request for information, what we call it as an RFI, if I raise it to them, how responsive they are, what kind of information sharing they are doing, I can drive my comfort with my customers' technology, and I have to ensure that whatever the tools they are using, they are well known and I understand the usage of it. And if I request information for their customer for certain things, there should be a transparency and there should be an information sharing.
As technology advances, regulators need to keep the pace. And that's particularly challenging across different regulatory environments and jurisdictions.
So I did use a word called regulatory arbitrage. So I think that's becoming challenging for most of the compliance officer sitting into the similar position as mine, that we don't have a standard guidance right now. So FATF has issued a paper last year wherein they talked about the jurisdiction which has come up with the regulatory frameworks and all that stuff. So I think there is no one size fits all. So FATF has come up with a good global standard practice, but every country has a different regulation. So coming up with that pace sometimes become very challenging. So I think there should be certain global standards, and that's something what we always advocate for. Plus your regulatory, guidance given to you by your country regulator. But the challenge remains the same. So there is a lack of standardized regulations across different jurisdiction, and tracking transaction on decentralized platform adds to the complexity. So I think that's what I can see. There is a rapid evolution of the virtual asset, but there is a lack of standardized regulation. So if we have that kind of a guidance paper, that will help us and make everybody's life easy.
And just referencing at the recent RegTech conference, you moderated a panel on technologies for AML and compliance. From that, what are you most excited about with regards to virtual asset compliance?
So it was a very interesting conference which I moderated, and this was a police conference. So there were a lot of people who has come from the regulatory background. So what is RegTech? It's a regulatory technology. It's transforming the ways we handle virtual asset compliance. These advanced tools are making it easier and faster to navigate the complex world of compliance by automating many of the processes involved. So using AI and machine learning, RegTech can monitor transactions in real time, perform predictive analytics, and assess risk more efficiently. This means financial institutions can quickly detect and respond to suspicious activity, which is crucial for staying compliant. So, what really interesting is how RegTech integrates the other technologies like blockchain and decentralized identification verification system. So blockchain provides a transparent and immutable record of transaction, which is incredibly valuable for audits and compliance. Decentralized identity verification helps maintaining the user privacy while ensuring only legitimate individuals can transact in virtual assets. Most of these customers are non-face-to-face customers. So I think RegTech enhances the efficiencies and effectiveness of compliance efforts, allowing financial institutions to stay ahead of the regulatory challenges and emerging risk in the virtual asset space. So I think this is something wherein I feel that RegTech would enhance the virtual asset compliance.
Perfect. And what are emerging trends in the virtual asset compliance that you would advise banks should look out for or prepare for?
See, I think emerging risk is something we all know that, because I think there is an adoption happening and people are doing the diversification from the traditional. What we used to do, if I talk about my grandparents or my parents' time, everything what we used to buy is only the land or maybe the gold. Eventually, we started exploring equities and mutual funds and all that stuff. And I am investing into cryptos. I do believe into cryptos, but are the cryptos okay? There is no intrinsic value. Is this something which is regulated by the central banks or central reserves? They are still not there. Is this still integrated in the mainstream banking system? They are not. So if you ask me, I don't think there is a standalone emerging risk which is only limited to cryptos. I believe the cryptos are more transparent because they are on blockchain. I've worked on the both side, like on a traditional financial side and on the virtual asset side. I believe crypto tracing is much transparent, much easier, and the companies like Chainlesses or Elliptic, these vendors offer sophisticated blockchain analytics services that help trace and monitor suspicious transaction, as I told you, in the real time. So I think these are the drivers which delivers actionable insights and for compliance teams through their blockchain systems. Software includes features such as wallet screening, transaction monitoring, risk scoring, all of which help financial institutions manage and mitigate risk effectively.
I hear from this that banks who don't do this well yet should certainly get into that space of monitoring it, because the potential to monitor it, the transparency is way higher than in the traditional payments and transaction areas, especially when you consider cash. But yet I would say still a lot of banks don't really do it, don't have the capabilities in-house, don't have the partnerships with some of the RegTech firms that you mentioned. So I think there's probably a call for actions.
Absolutely. So to sum it up, you would be hearing a word called closed loop banking. What is closed loop banking? Me as a customer having a bank account, I want to invest my money. And if you don't give me the options to diversify my portfolio, what will I do? I will move to the crypto companies and start investing there, or move to the brokers. So I think bank is missing on that revenue element of it. So you have to convert your cost to the opportunity versus the risk. So you already have the customers which is there into your books, which is investing. So as I told you, inclusion, and that's something which FATF is also recommending. You cannot get away with it. Make your risk-based approach, make a tier system, do a deep dive. Maybe you can have a platform which can offer maybe limited tokens, which is very well known, not offer any kind of meme coins or any fancy tokens. Just start slow. Maybe do a white level partnership with a regulated crypto company or a crypto exchange, and that ways you can leverage into their skills, their regulatory licenses, their protocols, and their tools and all. So the investment will be less, but you can't shy away from it. These are the light years, and I think the speed is the key. And if you don't be a part of the game, possibly you'll be losing those commercial drivers from the system.
And if you had one advice for compliance officers today, what would you recommend them in how to strengthen their AML strategies with regards to virtual assets?
If I were to give one piece of advice to compliance professional looking to strengthen their AML strategies, especially into virtual or digital asset space, it would be wholeheartedly embrace technology and commit to continuous learning. Staying informed about the latest developments in RegTech, understanding the evolving regulatory landscape, and fostering a culture of compliance within the organization are essential for an effective AML strategy. So, to sum it up, the future of virtual asset compliance is shaped by increased regulatory scrutiny, the integration of advanced technologies, the adoption of blockchain, and the development of global standards. In a constantly evolving world, your greatest assets are your curiosity and your willingness to learn. So, embracing new technologies and staying abreast with the regulatory challenges are not just keeping up, they are about leading the way and setting new standards in your field. Never stop learning and never be afraid to innovate.
Final question from my end. What's the number one question you get asked with regards to your job at dinner parties?
Well, what will be the Bitcoin price in the coming 6 months?
What's your answer? No,
If
you don't need
if
to. Yeah.
if I knew it, I possibly would have actually hung my boots and resting somewhere near the beaches or the mountains. So nobody knows. You can't predict. I think let's enjoy the joyrides.
Are digital assets on your organization's radar? Or are you expecting the Bitcoin bubble to burst? How do you monitor Bitcoins and oversee especially the exchange of fiat to crypto? Join the conversation by connecting with us on your podcast app, writing a review of the show, or emailing us at bcgoncompliance@bcg.com. Be sure to subscribe to get more insights from compliance innovators. I'm Hanyo Seibert. Thanks for listening.